Types of listing agreement: open, exclusive agency, exclusive right to sell, and net. An open listing includes lots of brokers, but none is protected. It's a unilateral contract. Only the seller must perform. The broker is not required to perform or advertise. Termination: either party may terminate at will, often results in procuring cause disputes. Exclusive agency: if the seller sells, no commission is paid, but if the broker sells, the listing broker gets paid. Other brokers must work through the listing broker. Broker is paid if any broker sells the property. This type of listing often results in procuring cause disputes. This is where the broker is paid no matter who sells the property. Most widely used type of residential listing is a bilateral contract where both parties are obligated to perform and is a broker's preferred listing agreement. A net listing is not a separate type of listing. Rather, it's the way in which the broker may be paid on an open or exclusive listing. The seller names a net figure. The broker must add his commission to get paid. The broker may not be unjustly enriched at the seller's expense. They may not receive more than a customary commission, and net listings create many problems. Let's look at a net listing calculation. The problem states a seller wants the broker to add his commission to the seller's requirement for a $150,000 net. The broker wants a 7% commission. What price will satisfy both? You divide the net amount by 100% minus the commission. So that's 150,000 divided by 0.93. What you've done is you've reduced the 100% by the 7% that the broker wants as a commission. And then you take the net that the seller wants and divide it by that number. So 150,000 divided by 0.93 means that it needs to sell for $161,290.32. The broker is paid to either find a purchaser or effect a sale. Finding a purchaser means finding someone who's ready, willing, and able to buy. Effecting a sale simply means no closing, no commission. The transaction must close. A real estate broker may not share commission or pay a referral fee to a person who is not a licensed broker. A Florida broker may pay a referral fee to a broker licensed in another state or country provided the other broker does not violate Florida law. Procuring cause. To be due a commission, a broker must initiate a continuing series of events that result in a contract. Simply showing the property is usually not enough to establish probable cause. The Commercial Real Estate Leasing Commission Lien Act only applies to commercial properties. The lien attaches to the owner's interest in the property if the owner owes the money. It will attach to the tenant's leasehold interest if the tenant owes the money. Broker must disclose lien rights to the owner at the time of management agreement, and the broker must sign a lien notice within 90 days after the tenant takes possession. Unauthorized practice of law is a third-degree felony. Brokers may prepare listing agreements, sales contracts, option contracts, and leases on Supreme Court-approved forms. They may not prepare deeds, mortgages, or notes. The statute of frauds requires contracts must be written to be enforceable if it is for sale of real property or won't be performed within 1 year. Exception where they need not be written: if full performance, the contract has been executed, the transaction is closed, or partial performance, partial payment is made, and one of these other two things has occurred. Either buyer has taken possession, physical possession of the property, or the buyer has made some capital improvements. The e-Sign Act. Electronically signed contracts are legally enforceable, and this includes faxes. Parties may insist on written signed contracts, though. Here are some documents that's helpful in writing a contract: the deed, the survey, the mortgage, and zoning information. Provisions of real estate contracts include a written agreement for the transfer of real property. The Florida Realtors or Florida Board contract is designed for residential transactions. It is not suitable for a business purchase, construction contract, contract for deed, exchangement agreement, lease with option to buy, option contract, unique or complex transactions, or a unit in a cooperative. Time is of the essence clause. All dates must be met on time or the result is default. Suggestion: use realistic dates. Use consistent dates in different clauses. Use calendar to monitor the deadlines. Effective date, the contract date, is when the last of the party signs or initials the contract. The parties to a contract is the seller and the buyer. With the seller, the name should be shown as it appears on the deed. Spouse's name should be included if it could be a homestead property. All sellers on the deed must sign the contract, whereas buyer's name should be shown as buyers want the name shown on the deed. Contract may later be amended to add a buyer. The types of ownership for a contract would be sole owner, joint tenancy with right of survivorship, tenancy in common, and tenancy by the entireties. Sole owner is sometimes referred to as owner in severalty. With joint tenants and right of survivorship, if one party dies, the others on the deed own the property. Tenancy in common: if an owner dies, property is distributed by the will. And then tenancy by the entireties is owned by the marriage. If one party dies, the spouse owns the property. With earnest money, you need to enter the name of the party who will hold the deposit. If the broker has no escrow account, it'll be a title company or an attorney. What form is the funds coming in? Will there be subsequent earnest money pledged? Is this old earnest money for a new contract? And also, when and if the licensee is a buyer. Legal descriptions. It is an essential element of the contract. It must be complete enough for a surveyor to locate the boundaries. Platted subdivisions should include the county name, subdivision name, lot and block number, and the plat book and page number. The purchase price. If the purchase price depends on a survey, method of calculation should be shown. Method of payment includes the deposit, financing, and cash due from buyer at closing. Financing term. The time limit for loan application and approval. Licensee should be realistic time periods. Owner occupied as a principal residence. May need this language for loans greater than 80% of value. And then the contract, conditional on buyer obtaining a loan. Buyer can't take action that would prevent the loan approval. Types of financing. Is it going to be cash? Is the seller going to finance? Is the buyer getting a new mortgage? Will it be conventional, FHA, or VA? What's the interest rate? Allowable seller concessions, and the lender consents to assumption. When it comes to chattel, personal property, and fixture inclusions, you need to prepare and attach a detailed inventory of all personal property included in the sale with defects disclosed if applicable. If individual items are listed with a value, it can result in a sales tax liability. The date and place for closing. Not a legal requirement. However, the court can set a reasonable time if the parties don't agree. And remember, time is of the essence. Evidence of title. The time period to examine the title. Sellers must convey marketable title subject to liens and encumbrances. Proration of expenses and income. Taxes, interest, rent, and homeowners association fees. What about possession of the property? Is the seller retaining possession? If so, a separate residential lease should be signed. Is the buyer going to occupy before closing? Buyer should take property as is after an inspection. Separate residential lease should be signed. Is it tenant occupied? You need to get a signed estoppel certificate or letter from the tenants, and insurance for delayed possession. Some other contract provisions is the time allowed for acceptance. Letters, faxes, and emails are legally enforceable documents. And if the type of deed is not specified, the seller must deliver a warranty deed. If a breach occurs, the injured party can request liquidated damages. For example, the good faith deposit. They can sue for rescission on breach. If the seller defaults, the buyer cancels and gets their deposit returned. They can also sue for compensatory damages or specific performance, which makes the other party perform. Other contract provisions, special assessments. Licensee as buyer or seller must disclose license status. If the sale is conditioned on the buyer's property selling. Property inspections, conditional on a spouse's approval, first right of refusal, and not required witnesses or acknowledged when writing a purchase and sales contract. Stigmatized property. A licensee is not required to disclose to the buyer that the property was a site of a homicide, suicide, or death, or that an occupant of the property was infected with HIV or diagnosed with AIDS. Also, under stigmatized property, Florida law does not address whether or not a home alleged to be haunted is a material fact. A licensee dealing with such a property should seek legal advice as to whether or not it should be regarded as a material fact that requires disclosure. The buyer must be given the homeowners association disclosure, or buyer can cancel the contract within 3 days after getting the disclosure or prior to closing. Contract must have the words describing the disclosure form, or the contract is voidable at the buyer's option prior to closing. Ad valorem tax disclosure. Ad valorem means according to value. We're talking about property taxes. A homestead property with reduced taxable value because of the Save Our Homes Amendment may cause a surprise to the buyers. A disclosure must be given to buyers. It says a change of ownership will trigger a reassessment that may result in higher taxes. With regards to transaction fees, to avoid violating RESPA, the fee may not be excessive and must bear relationship to actual services performed. May not be simply an add-on fee with no work performed by the broker and must be fully disclosed. Johnson versus Davis applies only to residential property. Sellers must inform buyers about known property defects that affect value. A community development district is a local private alternative for financing infrastructure. Sales contracts must include a disclosure that the CDD can impose taxes and assessments in addition to regular county taxes. Building code violations. Sellers that have been cited must state the existence and nature of the violation, give a copy of the notice, state the buyer agreement to be liable for correcting the violation, give notice to the code enforcement agency of the property transfer, name and address of the new buyer, and copies of the disclosure given. A promissory note is a promise to pay a sum of money in the future. It's an IOU. A note without collateral is considered unsecured. A note backed by collateral with the word referring to a security interest or mortgage is secured. The note must state the amount of debt, interest rate, time of payments, and term of loan. Agreement for deed is also called contract for deed, land contract, or installment contract. And licensees may not prepare agreements for deed. Essential elements of a mortgage: borrower and lender legal names, signed by the borrower. Legal description: must convey security interests and must reference the promissory note. The parties to a mortgage is the mortgagor and the mortgagee. Ors give, e's receive. So therefore the mortgagor is the borrower. The mortgagee is the lender. It sounds like it should be reversed, so don't let it trip you up. Special provisions and clauses. You have acceleration, which means the entire loan is due on default. Prepayment. The borrower can prepay without penalty, and due on sale accelerates the loan if the property is transferred without lender's consent. Mortgage theory. You have title theory and lien theory. Title theory is legal title held by the lender or a trustee until the loan is repaid. Borrower retains equitable title. Lien theory, the borrower has possession and legal title to the property, and the lender has a lien on the property. Mortgage priorities. Property taxes is first. Second is special assessments. And then 3 is other liens that are usually based on chronological order. In the case of default, lender accelerates the mortgage and forecloses. The lender must produce the original note or an affidavit of a lost note. Average foreclosure time in Florida is 1,025 days. The property is sold at public auction. Lower priority liens are extinguished. The successful bidder at the foreclosure sale gets a certificate of title. Lenders not paid in full may request a deficiency judgment, and equity of redemption means that the borrower can prevent the sale by paying off the mortgage balance. Mortgage types, you have term, which they sometimes refer as straight, fully amortized, and partially amortized. A straight or term loan Common in development and construction loans, the balance comes due at the agreed end of the term. Fully amortized, paid off in periodic payments of principal and interest. And then partially amortized is where payments are made for a period ending in a balloon payment. There are also adjustable rate mortgages, graduated payment mortgages, reduction option mortgages, early payment mortgages, 15-year payment mortgages, 3% down payment, and buy-downs. An adjustable rate mortgage is where the rate's calculated by adding the index to the margin. The index changes periodically, however, the margin does not. The four major indexes are 1-year constant maturity, yield of the U.S. Treasury securities, cost of funds, and London Interbank Offered Rate. Mortgages by purpose, purchase money, seller financing. Participation, equity kicker. An example is a shared appreciation mortgage. Blanket mortgage covers more than one parcel. Reversed annuity for elderly owners. That's not repaid until the sale of the property or the owner's death. Package mortgage includes personal property, and then home equity mortgage is a second mortgage from the bank. Conventional mortgage loans, they're not government insured like FHA or guaranteed like VA. They usually have a higher qualifying requirement and cannot be assumed by a new buyer. They are conforming loans that meet Fannie Mae and Freddie Mac standards. Private mortgage insurance is required for loans with higher than an 80% loan to value. FHA mortgage loans, they're insured. Borrowers pay mortgage insurance premium for loans with higher than 80% loan to value. There's also an upfront premium. Down payments are required at least 3.5% of whichever one is the lesser value, purchase price or appraisal. Types of FHA mortgage plans. Section 203B is for residential property. Section 234 is for condominiums. Section 245 is for graduated payment mortgages. And Section 203K is for construction loans. VA mortgage loans are guaranteed by the VA. Maximum VA guarantee adjusts periodically. Lenders will loan up to the amount with no down payment. A certificate of reasonable value, otherwise known as an appraisal, is based on an appraiser's estimated value. When a contract for deed is used to finance the purchase of vacant property, the buyer gets contract and possession, but no deed at closing. After the buyer makes all payments, the seller gives a deed. Licensees violate the law if they sell land with a blanket mortgage that can't be released for payment less than the buyer owes. Installment sales contracts are basically owner financing. Many sellers like to finance the property sale because of the favorable tax treatments. Additionally, the seller may receive a higher price and get a good interest rate. The Consumer Financial Protection Bureau has regulatory power over the Equal Credit Opportunity Act, Truth in Lending Act, Real Estate Settlement Procedures Act, Home Mortgage Disclosure Act, Safe Mortgage Licensing Act, Federal Interstate and Land Sales Disclosure Act, and the Fair Credit Reporting. The Equal Credit Opportunity Act prohibits discrimination based on race, color, religion, sex, national origin, marital status, age, receipt of income from public assistance programs, and applicant exercising any right under the Consumer Protection Act. The purpose of the Truth in Lending Act is to disclose credit cost to make comparisons easier. Cost of credit must be expressed as annual percentage rate. When an ad shows items such as down payment, interest rate, or monthly payment, a trigger term, the ad must disclose all the components of financing. It's better to write easy terms than 5% down. Residential loan underwriting. Application for mortgage. The loan app is processed, and the Fannie Mae desktop underwriter gives a pre-approval or not. Your credit scores. Their most important factor of a credit score is the payment history. Income is verified, and then they apply the income to income and expense ratios. Here's an example of loan underwriting, income expense ratios. Buyers have a monthly income of $5,200. Other obligations are $412 monthly. Their monthly PITI is $1,450. What is their debt to income ratio? The total debt to income ratio is 35.8%. Total monthly obligations divided by monthly gross income gives you that figure. 1862 divided by 5,200 is 0.358. Loan underwriting income and expense ratios. These are the recommended ratios for applicants for conventional FHA and VA mortgage loans. Conventional, 28%, 36%. FHA is 31 and 43%, and then VA is just 41%. But VA does subtract the total obligations from the gross income. The result must exceed the amount shown in the VA table of residual income. Property analysis with the loan underwriting is the appraisal, the title examination, and the survey. The loan analysis is loan-to-value ratio, interest rate and discount points. 1 point equals 1/8% increase in yield for the lender.